All right, hi everyone. This is Gitika, and from the School of Humankind. And this month's theme, we're following this month's theme on anxiety, and we figured that a lot of female entrepreneurs and many women really go through a lot of anxiety when it comes to finances, and that is why we are here to solve this problem for you. We won't be able to solve the entire thing in 20, 30 minutes. However, we want to make you understand the basics that are required in any business and are very important for women entrepreneurs to know. Now, women entrepreneurs, as is, don many hats. They look at the marketing aspect, they look at almost everything. So, these founders and entrepreneurs have to go through their own rigorous process. One thing that I noticed, however, is that the finances always take a back seat because many times finances are considered to be the difficult aspect, and that is left to another employee or somebody is hired for doing that. And many times the basic concept of what is happening is not understood by the entrepreneur herself. So that is why, taking that into account, we want to bring you something that would solve your problems. So for me, I love finance. I love storytelling. So we will look at something through film storytelling to understand this basic concept. And I will start with the story then. And that story is of Raj, this guy that you can see on the right side of your screen, on whatever side that you're watching it. I think it's on my right side. So we're talking about Raj, and at a very young age, Raj realized that he had some exceptional observational skills, and that led him to start a detective agency. So it started very small for him. He would, solve petty cases at home or for the neighbor or, on the streets, really. And he had some exceptional skills like Sherlock Holmes that made him start a detective agency. And remember, this is way back, this is 1999. And he decided to do this. So, with 5 to 6 friends of his, he embarked on this journey where they all started doing this together. And a very amazing thing happened that he got a big client, and he promised to pay rupees 50,000 to him. Now that's a huge amount. Uh, that's that's great for him, and he decided, okay, now I'll have to understand what I need to do further. So he was very good at his skills, what he did, right? He was a very good detective. However, he was very bad with numbers and he did not really understand numbers, right? So he solved his first case successfully. He was able to do this, and he waited for his colleague to come to the car. He was sitting in this one abandoned car, and he had done a lot of it. So a lot of things had happened, and he was able to successfully solve the case. And he was very proud of himself, very extremely proud of himself. However, something happened after that. So I'll want you to watch one scene that I'll be sharing right now and look at it so that we can jump to the concept for the day. So I will share that screen, I'll share my screen and that particular. So there we go.
अली भाई, रामलाल, पैसे कहाँ है? गिरा दिए क्या? डूब गए। कैसे कैसे? बता दो कैसे डूब गए। जुए का टेबल तोड़ा, 10,000 रुपए चुका है। 2 कुर्सियां तोड़ी, 2,000 रुपए। 12,000 रुपए हुए ना बाकी। 2 कट ग्लास के एक्सरे, 900 रुपए। 12,900 बाकी। और झूमर 20,000 रुपए। 32,900 बाकी। गुलदस्ते और छोटी मोटी चीजें 1,000 रुपए। हाँ तो यार 33,900 बाकी। बाकी वो जो सुपर बैंक की तरह टायर मार के निकल गया था ना कान तोड़ के, वो इम्पोर्टेड कास्ट था। 15,500 रुपए भर के आ रहा हूँ। ओहो, इतना कीमती कान तोड़ के नीचे आने की क्या जरूरत थी? सीधा सीढ़ी से नहीं आ सकता। यार मुझे कोई शौक है कान तोड़ने का? मेरे पीछे कुत्ता पड़ा हुआ तू गाना गा लेता। लेकिन रामलाल फिर भी 600 रुपए तो बचे होंगे ना यार। 600 रुपए। ये मेरी हालत देख रहे हो? क्यों नंगा आने वाला था यहाँ? 500 रुपए कपड़ों का भाड़ा लेकर आ रहा हूँ। ये 100 रुपए बचे हैं, इसे संभाल के रख लो। कोई बात नहीं, कोई।
All right, so I will deconstruct this scene for you and what exactly was happening. I'll let you know. Okay, so the scene really was showing us what was happening. Is that he was sitting in the car and his colleague Ramlal brings this bag, and Raj is expecting, or he's expecting rupees 50,000 to be in that bag. What he did not consider were the costs that were involved. So Ramlal comes to him and he says that we have lost all the money. So Raj does not know and understand how can we lose all the money. So while solving the case, he incurred a lot of costs. So because he's a detective, he was running around, he was doing a lot of things, and he was breaking a lot of things in the process. So in this particular restaurant where he was, there was a gambling table that he broke. Then he broke some chairs. Then he broke imported glass, and all these things costed him or the team really. And that guy Ramlal, who is his colleague, had to pay all this money before getting to Raj. And finally, when he got there, the bag was empty, and he was just left with 100 rupees. And that really brings me to the concept for today. And the concept is of income statement. Now, many times we all as entrepreneurs don't understand or are not able to see, forecast many times the cost that would be involved, especially when you are working for the first time as an entrepreneur. So this was his first case. And there are some things that Raj missed to understand. So he first thing that he missed was to understand what would be the costs that would be involved in the business or the project that he has undertaken. So he had forgotten that he will be liable for the things that he is breaking, right? And that is called the cost of revenue. And we will discuss that, what it means. So like I said, one of the key financial statement is the income statement. In US and in the UK, it is called the income statement. In India, it is called income statement, and it's also called P&L account or the profit and loss account. So it's just the difference of terms, really. We use US GAAP in US and UK and Canada as well. So the point being that this statement records the profit and the loss of your organization or your business. Hence, it becomes a very important statement for you to understand. This statement helps the business to survive and also to grow, and also helps the entrepreneur or the owner to make informed decisions. And how does that happen? So let's understand. So on your right side, you will be able to see a statement. Now, this is a statement of Badshah Detective Agency. Badshah literally translates to a king, really. So this is what he had named his detective agency. And if you look at the first line, is the revenue of 50,000. which is his first case fees. And this is the scene that I showed to you just prior to this, where Ramlal was giving him all the expenses that he had to give away at the restaurant. So he had broken the gambling table for 10,000, chairs for 2,000, ashtray for 900, chandelier for 20,000, and all these things, which really amounted to 49,900. And if you can see, he was left with a profit of just 100 rupees, right? So many times we as entrepreneurs forget and not see what would be the costs involved. And this is what an income statement for a service business looks like. I'm not going to the manufacturing aspect right now because a lot of women entrepreneurs that I've come across are in service business. So let's stick with that. And it's also very easier to understand right now. So this is how an income statement for a service business looks like. And this is the most easiest and the most simplest thing. So your revenue minus your cost becomes your profit. Now, if your costs are higher than your revenue, which is your sale aspect or your income aspect, then it would be a loss, right? Now, there is something called tax also on your income. If you're making profit, you would be paying some tax on it. If you're making a loss, then obviously you don't have to pay anything because you are in losses right now. So this is how it generally works. Some of the learnings here we can see is that revenues. So revenues come from different sources for different businesses. So this could be your rental income, your interest income, your fee-based income. And it is important that if you are making this income statement, similar to what we just saw, you will have to break down the income sources from where it's coming from. Because that way, you would be able to take better decisions in your business. So, for example, if you run a service business, or this could be anything, your coaching, your any other workshops that you give out. So, those kinds of business, you would want to segregate your revenue where it is coming from. So, in the first line, which gives the revenue, please segregate. So, my fees that is coming from different workshops should be written separately from your rental income that is coming, or interest income, which is your passive income that you're earning from different sources. So that would be a great way to start, and for you to know how your business is actually doing and where it is earning that money from. So there is one very important principle that I would want to highlight here, and that is called the revenue recognition principle, which means that you should be able to recognize the revenue. So it is also called the accrual basis of counting. And I wouldn't want to go very technical, but I would just want to highlight. So two things can happen. So if, let's say, I give out workshops. So I give out a workshop on 20th of the month. So 20th February, let's say. But I am not paid for it till the next month. So for the month of February, I will record that as revenue because I have given my services. So my revenue would be recorded, and this is called accrual basis of accounting or revenue recognition principle. So I would recognize my revenue when I am giving out the workshop, right? So I will record it. I will record that this money would come in, even though I haven't received the cash or the cash receipt or the check, whatever. Even though I haven't received it, but I will record it. And therein comes another principle, which is the matching principle. So if I'm recording it, so let's say I did it for $2,000, for example. So $2,000 is my income that I would be recording. and the expenses would also be matching there. So if I am also making some expenses for that workshop, so let's say it's $1,000 of expenses or the cost that I'm incurring, I would write it down then and there itself. So the income statement would look like my revenue 2,000, my expenses 1,000, again segregating everything, and profit of 1,000. That's how it would be done. Now, let's say you haven't paid everything or you haven't received everything, but you will be recording it when you're giving your services out. So that is how big organization, not just big, but almost all, uh, except for somebody who's really working on cash, which is like very small, somebody who's selling just candy or something, they work on, which is a very small, they have just started it. So they are working on cash basis. That is for them. Otherwise, you should always record your profit and loss or your income statement on revenue recognition principle. Right. So expenses, like I mentioned, like we also saw in the scene that there could be rent on clothes. He mentioned salaries to employees, your materials, fees, legal, accounting fees, sales, marketing, advertisement expenses, repairs. All these should be, these are your expenses, and this should be included in your P&L or the income statement. Again, like why is it important? Now, this is so crucial. You should be doing this every month. And it is important because it gives you a decision-making aspect, right? So what is your decision-making ability? Is that you would understand when to cut cost, where to cut cost. You would understand that, okay, where can I earn more revenue from? Where can I do that? And let's say your revenue is very high, but your profit is low. So you understand your costs are very high. That means you'll have to deduct your costs somewhere. You'll have to do cost cutting somewhere. That is why income statement is super important and crucial for you to understand. You make better decisions when you have everything planned out and strategically written out. You would also understand profitability. So you would know that, okay, how much profitable I am, what am I doing right, and what am I doing wrong. So that is very crucial for you to understand. Future planning, of course, you would get to know, okay, if I am earning X amount right now, I would want to earn X plus 5 and X plus 10, and how you would want to map out your budget for the coming months. So that helps. Your income statement is a trend setter, so it would help you to set not only your budget but also forecast for future. So that is why income statements are very important. Yes, tax planning and compliance. Like I mentioned, if you've earned a profit in the business, you will have to pay tax on that. So you can also understand that in what time limit you have to pay. So there are compliances, legal compliances also there. So you understand that kind of, you have that understanding. Okay, now I understand I have to pay this much taxes. And if you are in losses, then you don't have to pay tax. Yes, it doesn't mean that that it's a very good thing, but uh, however, there are companies um, who might do this. That they might companies who do a lot of window dressing. So window dressing means that they are playing with your financial statements. We saw this in many cases, right? Big scandals where there was a lot of window dressing done to the financial statements. So many companies would not show a profit sometimes to avoid tax, and sometimes they might show big profits. So both cases are there. But for an entrepreneur, an income statement would help you to understand and help you with your compliance, tax compliance. This is super crucial. So finally, one last thing that I would want to discuss here is that some crucial metrics and terms that are in the income statement. So EBITDA is one of the very crucial terms, but for a service business, not so much. Um, because in a service business, there is not so much of depreciation and amortization. But it's a very important term in terms of it helps analysts and the company to know that if I were to sell my business tomorrow, it can go at what rate. So that means it can be multiplied by an industry benchmark and one can get to know a number. So EBITDA really means earning before interest, taxes, depreciation, and amortization. This is the full form of the word of the acronym EBITDA. Then there is a recurring revenue and non-recurring revenue, a very important distinction to make. So for a service business, if you have memberships, if you have um, subscription model, these are your recurring revenue. So people would buy for 3 months or 5 months. And this can be shown in the first line item, like I had mentioned above, in the above slide, that revenue should be mentioned there. So segregating revenue. So you know that these people are my recurring people. They will come again and again. And this is the revenue that I'm earning through my membership, through my subscription, or any kind of fee that you charge for your particular service that you offer. And non-recurring revenue would be a one-time fee that you earn from somewhere. So this also is very common. So again, segregating it is very important. The last metric that I wanted to discuss is to calculate revenue per person. So what does that mean is you divide net revenue and divide it by the number of people that you have employed in your business. So these can be either part-time employees or full-time, both employees, everybody. This helps you to understand how much revenue is being generated by each employee in the business. Okay, so higher the number, that means higher the productivity, higher the ratio, but it also depends upon the industry that you are in. So it's not always like that. So you'll have to see the benchmark in the industry also. So it is very crucial for you to follow this. Is this number decreasing? Is this increasing? When you read income statement, you get such valuable insights that you can make better and informed decision as a founder and as an owner of that business. So you will not default to what you are actually doing, but you will make informed and conscious decisions when it comes to writing and reading your income statement. Right. So I think I have already mentioned this time and again. There are obviously there are many technical terms involved here, and I'm not using that, and I've tried to keep it as simple as possible so that everybody can understand it right now. But this financial statements, all of them, there are 4 to 5 which are very crucial. 4 are the most crucial ones, and it really empowers you to make informed decisions. It supports your growth and ensures your long-term sustainability. And therefore, it is important that you continue to understand this so that you can empower yourself, and you won't really be dependent. And when your CA or CPA tells you something that you know what he's saying to you and he or she is saying to you, and you're not just like, okay, I don't know what you're doing, do it, I trust you. But you would be like, I know what is happening, I am not unaware. So that's a very crucial thing for entrepreneurs to know the finances of your company, to understand that at a deeper level. So thank you very much. I hope you understood what I tried to tell you in just 20, 30 minutes. And we can go obviously deeper into this, and you can look at different free events and paid events at the School of Humankind. I'll be available there, and a lot of other amazing people are available there who, in their particular field, they're doing very good job. So I would want you to go and register for these events. All right. Thank you so much.